Hey, everybody, welcome to the Under the Hood podcast. Today on the show, we have Jeff Embry, and he and I will be talking about the crypto market and specifically three things. The first of which is what factors to pay attention to in the market to evaluate crypto today. Then we'll jump into how much of your portfolio should be in crypto. And finally, we'll talk about how we should evaluate various tokens in the crypto market. Jeff, you ready to get into it?
Let's get into it, Tim.
Of course. Thanks for coming on the show. And we like to jump right in, hearing about you, your story, and kind of your just journey through the financial space. So yeah, take us through that.
Sure, let's do it. Started out of college, went to San Diego State University, finance major. Always wanted to get into finance, but moved to the Bay Area. And of course, in the late 90s, it was all technology. So I started in both hardware and software. And that got the technology bug going a little bit. Had an opportunity to move my career to finance through at the time, a small company, private money manager called Fisher Investments. They were a 4 billion assets under management company at the time, only 200 employees. So I got great exposure to Ken Fisher, now one of the most successful business people in the world, also one of the wealthiest. I think he's number 150 in the US, 250 overall. And I got to be there early. And we grew the company in my 7-year tenure there from 2002 to 2009 from 4 billion AUM to 49 billion AUM. So just a trajectory like this. Private money manager, he's a global macro top-down economist that understands how capitalism works, politics, legislation, the 4-year presidential cycle, and recessions, bull markets, bear markets, and all of that. So I absorbed everything I could. I was fortunate enough to travel the country with him. Probably saw him speak 200 times. And again, that's where I cut my teeth in the industry. So 7 years as a private money manager there. Moved to another smaller private money manager, about 6 billion in AUM, also a tactical top-down money manager. And then moved to a small private company. And then COVID hit, and that kicked, basically everybody that just started their career somewhere else out of there, and eventually found my way to founding Globe 3 Capital, a liquid token crypto hedge fund. Give you a little bit of background there. One of my best friends, met him in college. He became a crypto expert about 8 years ago, maybe 9 years ago now. And he bought Bitcoin when it was at between $200 and $300. He likes to say I sold it too early. But that got him down the rabbit hole, as it almost does everybody. So he read the white paper, he bought it, he understood decentralization and the aspect and I guess what you would call the value of Bitcoin and decentralization and what that could take, humanity, the industry, finance, etc. So he turned what turned into a hobby, into a passion, into a money-making passion. And he started teaching me about the sector, the cryptocurrency market. We saw in 2022 a crypto bear market that was collapsing. We saw a equity bear market that was collapsing, going through its typical cycle of a bull and bear market. And we came together and decided that the opportunity was never going to get better to launch a crypto hedge fund. In essence, we saw we were getting 2016 and 2017 cryptocurrency pricing, including Bitcoin, for 2022 adoption and technological development. Amazing. So we knew blockchain was the future. We knew Bitcoin, cryptocurrency was the future. We saw an amazing opportunity where pricing was substantially lower than where it should be. Adoption was coming, and that we could get in early before the masses got there, and we could figure out how to onboard friends and family, the next circle, of cohorts and acquaintances, and then eventually would build our firm out from there. So we launched Globe 3 Capital in July of 2022. and have never looked back. We like to say now we were a little early to that bear market bottom, but being in the business for as long as we have, we know you'll never call the perfect bottom. You just want to get in at or near a bottom. And if you do that in a new bull market cycle, you've solved about 70% of the equation. So we launched again in July of 2022. The equity bear market bottom happened in October 2022. And the crypto bear market happened after FTX went bankrupt in November of 2022. And again, we've never looked back and having the times of our lives.
There we go. There we go. Well, yeah, that is a lot. And I was about to ask how you jumped from, kind of more traditional wealth management, private investment management into Globe 3 Capital, but it sounds like your friend was the key who has that 8-9 years of experience and started on the Bitcoin train back in what, 2014, 2015, something like that.
Yes. Yeah, perfect. So yeah, and it really, we just saw it as a great partnership. He brings, and so for 8 years, he had a couple businesses that were on autopilot. He said, if I work 3 days a week, I mean, 3 hours a day, I was slammed. And so he had all this extra time, and he's a guy that gets up at 4:45 in the morning. He said it'd be 2.5 hours before his family said their first word to him. So he was looking for something, something intellectual, something to spark his interest. And cryptocurrency and digital assets is what he found. And so he went down the rabbit hole, spent 8 years reading everything he could, playing in what we call the DeFi summer, which was the bull market of 2020 into 2021, where DeFi exploded on the blockchain. And he would go into protocols and yield farm and liquidity pools and all these great new things and really learn it from a standpoint of what nobody else was doing. And he was so early, he would call me and he'd say, I have nobody to talk to about this space because nobody knows anything about it. And so the combination of his expertise and experience and him studying, as many protocols as he could, with my expertise of understanding how market cycles work and when to enter, a bull market and when to exit a bull market. And just, the legislation, the regulations that the government is working itself through. It's very consistent with the internet that most people missed in the mid 90s, the late 90s. We're going through the same exact thing. And Web3 is just a new iteration of the original internet, which they call Web 1, then in the mid 2000s, Web 2, and now Web 3. And so really, blockchain and digital assets and cryptocurrency is just advanced software, very automatic software, where now you and I and the rest of the world's population can own digital assets. And so we saw this convergence of his expertise, my understanding of how markets work, and this new iteration of the internet and software all coming together, for the next 10, 20 years of an amazing run. And we just wanted to get in front of it. And so that's where we are, why I'm here, and what we're talking about.
Yeah, absolutely. So where do you go to kind of stay up to date with the latest market trends in crypto and Web3 and staying on top of the latest financial strategies?
Great question. We often say here at Globe 3 Capital, the opportunity is in the complexity. So for if you think of the stock market, it's a very mature market. I mean, the data is out there. You can jump on a Bloomberg machine. You can pull up Yahoo. You can pull up charts for 50 years. You can figure out cash flow, PE. It's a market that most people and certainly the experts understand. So now to go to your question, this is a nascent market. It's a new business model where the people that own the tokens or supply the computing power are the owners of the network. So for a quick example, Google owns its network and it captures all of the profit and the revenue. It disperses a little bit to the YouTubers. That's it. They provide the content. They get a small piece. Google owns the internet. For blockchain, for Bitcoin, Ethereum, several of the other ones we invest in, the people that own it also share in the revenue and the fees that come out of it. And that's what they mean by decentralization. So with this new business model, there's very little data. that's out there. There's companies like Bloomberg that are assembling data and starting to pull on-chain data, and it's all out there. But there's no single place to go to. You can't pull up Yahoo and get revenue models going back on Ethereum for 10 years or 2 years or see what's changed in the last quarter. So that's coming together. So we often say we have a patchwork of research that we go to make our decisions. With my business partner, Matt Layson, he's been watching YouTubers, experts, researchers in the space through YouTube for 8 years. Lots of triangulation there, lots of scammers, lots of, shillers, if you will. And so it really takes thousands of hours to figure out maybe a patchwork of 10 to 20 researchers that you trust, are doing it because they're not getting paid by the protocol and that they've made great calls in the past. You have certainly websites you can go to study the protocols, but can you trust the information? Who knows? They're out of country, a lot of them. You also have research companies that are starting to bring on-chain data like the Bloomberg terminal to the forefront. And the final piece is the white papers. You've got to understand them. So we've got to understand the space, where it's going, and how these infrastructure companies are coming into it and what they provide. So really, it's not an easy format. But again, we think that's where the opportunity is. We're putting in the thousands and thousands and thousands of hours of work to come up with our strategy, our portfolio, to diversify and capture value in it.
Yeah. Yeah, absolutely. And the white papers, are multiple white papers published? Like, is that a consistent thing, or is it like the
Yeah,
OG white papers where you read them, understand it, and kind of go from there?
both. Every protocol that comes out, it's almost understood they have to write a white paper. Some of these can be 100, 120 pages. Some of them, like Bitcoin, I think were 12 pages. And what it is it's basically just here's our ideas, here's what we're doing, here's the area we plan to capture, here's the technology behind it, here's how it's going to work, the potential partnerships, here's how we capture revenue, which is in our space called tokenomics. So that's an interesting concept in itself. We, for the tokenomics, when we finally come down to make a decision, we have to go through about 12 different pieces on a checklist. To give your viewers a little bit of an idea, protocol might have 100 million shares, what we call tokens in our space, total supply, but maybe only 30 million of them are out circulating in the world of cryptocurrency. That's probably not a protocol we want to purchase, because what that means is 70% of that supply is still to enter the market. So that's one piece of tokenomics. Another piece might be, where is the revenue coming from? How do they generate fees? And then how do they split up those fees? How much, when they form the company, which would be in the white paper, how much did the team get? Did they only allocate themselves 12% of the company? Or, like some protocols we see, did they allocate themselves 30 and 40%? To us, that's too much. We won't own that company, because they're looking probably to dump it on the public, versus we're going to build such an amazing company and protocol and so much value to it that our 10 or 12% will suffice, and we'll be, we'll do great. The community will do great. We also look at how VCs are involved, venture capitalists. So if they're heavily involved, maybe that's a big sell order to come down the road. So there's just so many aspects of it. It's hard to really pinpoint any particular one.
Yeah. Those honestly sound like mini businesses, are just businesses. It's like, hey, where's the value in this token, or where's the value in this business? How does this business generate revenue? How's this token generate revenue? So talk to me about the parallels there. Is that a fair kind of comparison to make, or is it naive? And am I missing some stuff?
No, Tim, great question. Really. Let me back up a little bit. This is interesting. So a lot of people, they don't put the time in. What we call it is intellectual lazy. And we think this is one of the most intellectual and complicated spaces you could ever study in your life. But a lot of folks are just kind of drive by. They'll hit it and move off and think it's for money launderers. But this is always the example I give them, and very few people know this. Out of all the software companies in the world, the only company to get to $10 billion in revenue faster than Ethereum Ethereum is the second largest protocol. Bitcoin is the largest. Ethereum is the second largest. Ethereum was the second fastest company, if you measure it by years, to get to $10 billion in revenue. Google is the only company to have beat it. So Microsoft, Yahoo, whatever software company you want to put out there, Oracle, etc. So the revenue is generated, but it's how that revenue is distributed is the difference in the business model. So people and your listeners often hear the term decentralization. So if you think of a Google, it's very centralized. They made $10 billion. Their money came into their company. They had expenses. They had hundreds of thousands of employees. They distribute some of it, goes to the shareholders. Their value goes up. For Ethereum, their revenue comes in, and there's no central entity that captures all that revenue. So the people that provide the computing power, called stakers, they buy computers, and Ethereum is the second largest computer network in the world, and no one person owns it. Hundreds of thousands of people own that network. It's called distributed ledger technology. And so those people that put the computing power up on the network, they share in the revenue. The foundation, the Ethereum Foundation, gets a little piece of it. I don't know, they might get 3, 5, 7% of that. With that, they provide that to maybe they have 700 employees, 1,000 employees, compared to Google's 10,000, 100,000 employees. So Ethereum will pay their employees that are building software and enhancing the software that's on the network. They also give grants to others that are building applications on top of the Ethereum network. So it's really a circular, almost a non-profit profit type of company. And again, it's so hard to understand, but it's a new business model. It's similar in the sense to the old model, that we're so used to, of revenue, fees, capture, distribution, profit, build companies, etc. It's just this way. There's no single owner, no single entity that controls it all.
I see. That's very
Here's
interesting.
here's a way to think about it. Bitcoin, some of the Bitcoin maximalists, they'll often say it's equitable to all. So it's equal to everybody that uses it, and it's available to everybody that uses it. So Bitcoin is the biggest, most secure computer network in the world. It's available to anybody that wants to use it. It's open source. So if you're in, Canada, if you're in Alaska, if you're in Russia, I can send you Bitcoin. Takes 2 to 3 minutes, maybe a couple dollars, and instantaneously you have value on your phone. And quite remarkable.
Yeah, no, that really is amazing. It's so interesting that the model's so decentralized, like Ethereum Foundation only capturing 7% of the revenue from Ethereum, or whatever small percentage it is. It's just so counterintuitive, because then it's like, how do they stay incentivized to continue to do the work? Is there just that much revenue that 7% is enough, or um, are they just
Great question,
better
Tim.
people
Yeah.
than I?
So I apologize to your viewers. I don't know how many employees Ethereum currently has. I'm guessing between maybe 400 developers and 1,000. So that small percentage of revenue and fee capture that goes to the foundation, and the foundation is nonprofit. The foundation is there to keep Ethereum alive and the ecosystem and community healthy and building. And they have plenty of money. So that money, if you think about it, Google's money goes to support their 100,000 employees and their offices and everything else. Ethereum doesn't need that much because they have maybe 1,000 employees at the most. Their community is smaller. They give grants. They might have a couple office buildings. Many of their developers are spread across the world. And so really it's just a less revenue intensive model to sustain itself than these centralized entities like an IBM, a Cisco Systems, a Microsoft, a Google, etc.
No, I gotcha.
Yeah,
Okay,
it's
very cool.
fascinating.
Yeah. Well, thanks for that. Thanks for that deep dive there, and kind of pointing us to white papers that, help us get more information. There are various researchers out there, various organizations, but it's all really, it seems like it's finding the right community and the right people to listen to because it is very nascent, as we've talked about. And so I'm curious, what are the most important factors to pay attention to in today's market? Now, we could talk the crypto market, or we could talk the current market, or we could compare the both if they have any impact on one another. Um, what are the most important factors to pay attention to, and then high level strategy to really address those factors?
Okay, great question. And keep me on point, Tim. I want to back up one other thing. One other great area for your listeners, and that we point a lot of people to, is LinkedIn. There's a great digital asset, cryptocurrency, Bitcoin community on LinkedIn, and they will put out lots of small articles, and it's a great place to pick up and read a couple articles. And we follow a lot of great researchers. Some of the best researchers in the world are on LinkedIn, and we get nice, summaries from them every couple days. So that's a great way. You asked what are the most important things to pay attention to, and from my perspective, and actually Globe3 Capital's, our first perspective is coming from a top-down management level, which is, are we in a bull market or are we in a bear market? To give you an example, we launched in July of 2022, as I mentioned earlier, knowing that we were getting close to a bear market bottom somewhere on either side. November, that bear market bottom happened. It's been up ever since. In January, it's hard for people to remember this, but in January of 2023, 80 to 90% of economists were predicting a recession for 2023. Coming from a top-down perspective, you see the bear market cycle had happened. Bear markets end and bull markets are what comes next. That being a contrarian at the extremes is very valuable. Again, at the extremes, you don't always have to be a contrarian. But we knew that those 90% of economists that were predicting a recession were building in low pricing in the markets. So we knew our bet was on. We were 100% invested in 2023. We had a fantastic year. The S&P 500, a lot of the big banks and major institutions were betting that it'd be down a couple percent to maybe just finish up 4 or 5% for the year. Again, the S&P 500 finished up 24% for the year. Bitcoin was up 150%. So for us, in understanding that, that's where our advantage is. For 2024, our forecast was that the S&P would be up 17% and that Bitcoin would be up a little over 200%. About 40 to 50% of economists predicted a recession this year. So again, we're being contrarians against the, if you would, the majority, almost the majority. And they certainly are control and manage, the big institutions, banks, and brokerages, having those kinds of forecasts, either flat to negative. They control a lot of investors' money and their decision making. So again, we bet that it'd be very positive, and that's both markets would be positive, and that we'd get great gains. And so far, it's really working out nicely. So that's the thing that we pay attention to in markets. Now, once we make that decision, are we in a bull market or are we in a bear market? If you're in a bull market, you want to be invested. If you're convinced you're in a bear market, obviously you want to utilize a lot of cash, if not 100% cash. We've decided it's a bull market this year. We're in 100%. Now, how do we diversify that? So one of the ways we mitigate risk is we diversify across several sectors in the cryptocurrency space. You've got DeFi, layer 1, layer 2, DePIN, metaverse. You've got NFTs. Now, we don't invest in NFTs. We're not curators. We don't own a museum. We don't understand art. But we like to buy the protocols where all the NFTs come off. Very similar to the way you might buy Apple stock versus buying all the applications, the companies that put the applications on top. All those applications pay Apple 30% of their revenue. This is what we call the picks and shovels, the railroads and the toll roads of the space. And so that's what we invest in at Globe3 Capital. We look for the protocols that are building the foundation for this next iteration of Web3. So the guys that are going to see 1 trillion transactions come over their protocol, and maybe they just pick off 1/100th of a penny or 1,000th of a penny. but those are the next Ethereums of the world. And so that's what we do. So we look for those NFT protocols where every NFT that comes and hits it gets bought, gets resold, makes a couple percent, but we're not worried about the art that comes on those protocols. So that's a good example. So yeah, we mitigate risk by understanding market cycles. For your viewers, we absolutely believe this is a bull market. We mitigate risk by diversification through different sectors. We mitigate risk by being very patient investors, not paying attention to the day-to-day movements, the volatility or the noise, we call it. Because if you are in a bull market, you're looking from here to here by the end of the year. All the stuff that goes like this in between is just simply noise. So if you can ignore that and train yourself to ignore all the negative headlines, etc., have confidence in your forecast, that's a great risk mitigation there. And again, so far we're proving it in 2024, but a long ways to go.
Okay. So talk to me a little bit about, I know before the podcast, we talked about getting this into self-directed retirement accounts or being able to use self-directed retirement accounts to invest in something like this. So we just talked about how, some of the stuff to pay attention to is first, bull or bear market. Second, how are we diversifying? How are we mitigating across the different type of investment profiles? And I do want to take a deep dive into those investment profiles, just a little bit of a deep dive, not a huge deep dive.
Sure.
Yeah. And then I want to hear more about first, is it a good investment with your retirement account and why? And then second, kind of deep dive into the various things you diversify with.
Sure. Yeah, we were real fortunate. So to back up a little bit, again, we built this for our friends and family because we had so many people coming to us saying, I've got extra money. I want diversification and some exposure to this amazing space that I don't understand. I know it'll be the future. So when we built Globe 3 Capital as a crypto hedge fund, we made our minimum 100,000. And that allowed a lot of folks that probably would never get into this space again some diversification and exposure to it. Along the way, last November, we came into a partner that facilitates tax deferred investments into private limited partnership structures like hedge funds, crypto hedge fund, like ourselves. So for the first time, starting in November, we could take regular IRAs, traditional, IRAs, rollover IRAs, inherited IRAs, beneficiary IRAs, SEP IRAs, Roth IRAs, etc. And so we think because of the exponential return potential in this space, these kinds of vehicles for the right person, and if they have the right kind of wealth, makes a lot of sense because the money stay in the exact same title. So let's say John Smith, Roth IRA. It stays tax deferred. And we have the ability to close the account at any time and move it back to their former Schwab or Fidelity IRA. So we love that vehicle, and think it's a great way to supercharge that if there's extra. Now you asked something about the ideal investment. We are, if you think of stocks, it's considered a risk bucket. Out of bonds, cash, CDs, real estate, etc. We are the risk bucket out of the risk bucket. So we are not, if somebody has $3 million, they don't hire us with $3 million. We might take anywhere from 4%, maybe up to 10% of somebody's liquidity, depending on their situation. And we walk through it with them to allocate towards this kind of alternative investments. So I think that might have answered your question. Sometimes it's through the tax deferred vehicles like the IRAs. Sometimes it's taxable accounts or trust. We've had businesses hire us that have extra cash flow and want to make an investment, and then sometimes it's a combination of maybe a joint account and an IRA.
Yeah, absolutely. And now take us through. You mentioned NFTs. You mentioned level 1, level 2. Kind of take us through that whole gamut of products, if you. I don't really know what to call them, but
Yeah. No, that's great. Sectors. You can think of it almost like you might hear in technology a tech stack, right? So layer 1 protocols, Bitcoin, Ethereum, Chainlink, Polkadot, the big guys, and these things are worth billions and billions of dollars. they're the railroad, the toll road, if you will. And then the other applications stack on top of it, right? So Apple platform and phone would be considered a layer one. My Google Maps, my LinkedIn app would be considered just an application on top of it. And something that makes those work faster would be considered, and cheaper would be considered, a layer two. It would layer in between the original Apple, this one, middleware, if you will, and then LinkedIn or Google Apps or any of the other, 100 apps that are on my phone, grocery store apps, etc. And so for us, Globe 3 Capital, we want to invest in the base layer. We think these are the most sticky. They're going to be around the longest. If you make good decisions here, it doesn't matter about all the thousands and thousands that hit. Some of them will win, some of them will lose. It's almost very similar to the gold miners back in 1849. You could have a gold miner strike it rich here. His cousin 20 feet up the creek and 20 feet down the creek found an ounce. He found 100 ounces. And a lot of miners went home broker than they had ever been before they went out west. But the folks that made the money were the Levi Strausses, the folks that ran the supply chains, the guys that sold the picks and the shovels. And so that's what we look, and that's what we mean by layer one. Layer two, again, is more of the middleware, doesn't capture as much revenue. And then the applications, maybe a gambling application. There's NFT applications that can sit on top of it, etc. So, but there's hundreds of different kinds of sectors. We could go through maybe on a different call. I don't want to bore everybody, but yeah, it just goes on and on and on. If you think about it, there's 20,000 projects, probably more now, in our space, and we really have to sift through those to find the gems. Stay away from the scammers. Stay away from the rug pulls. Everybody's heard that term, fake software companies, if you will, and stay away from the meme coins that have no utility or no substance or no real true use cases behind them. They're just speculation. So we avoid all those, sift through them, and then go down for the layer ones.
Okay. So is whether it's on layer one your primary due diligence on these, or is it like that's the first checkbox and then I have 4 or 5 other check boxes to determine whether or not I'm going to?
Yeah, my partner, the chief investment officer, Matt Layson, he's developed what we call a token evaluation standard. And it's anywhere from 10 to 12 different categories. We rate that category 1 to 10, and he goes through it like a checkbox. And he says, all right, is this not necessarily a layer one, but is this protocol something we understand? Is it something we could use in the future? Is it something others are going to use and be required to use? Infrastructure, if you will, the roads, the pipes, the telephone, cell towers, those kinds of things. Maybe we give it an 8. Hey, we really like it, but we're not completely sold on it yet. Then we look at the team. Who founded the team? Are they an original from maybe building Ethereum or one of the other majors? Do they have credibility? How's the rest of their team? How much did they give themselves of this project? If they gave themselves 40%, tells us they're just interested in the money. They're not interested in this revolution that's going on. Or if they, even more we've seen. So we look at that. Maybe we give those guys a 9. Then we go to the revenue model. How are they going to gather revenue? Where's the demand going to come from? Is the demand going to stay within the ecosystem and regenerate itself and build off of itself, what they call networking effect, if that's a 10? And so we just go through those, we add them up, and we say, hey, this is a great project. Or we say, it's close, but they have a couple categories they need to fix. So let's put them on the bench. Give your listeners an example. At any given time, we will own between about 8 and 20 different tokens, protocols we call them, or tokens. And you could almost call them stocks. So 8 to 20 different tokens to diversify. And we have a bench of maybe another 12 to 25 that we're ready to plug in. So if any of these 15 disappoint us, they change, they do something we don't like, their team changes, their treasury changes, we can yank them out and we can plug in one of the ones on our bench.
There we go.
And so that's kind of the process there.
Very solid. Very solid. Well, Jeff, I don't really have any other questions for you. Do you feel like there's something we should have gone into a little bit more or something else you want to cover?
Uh, I just encourage your listeners that hey, this is an amazing intellectual space. Get to know it. You'll be ahead of 90% of everybody else out there. It's early, it's nascent, it's absolutely the future. Blockchain fixes things that are broken in our system. So it's faster, cheaper, more efficient, less friction, takes out a lot of middlemen in our system now. And what that means is it's less costly for people to use it, utilize it. Um, it's very secure. It can be very secure software, unhackable. And there's a lot of value creation we believe that is going to enter the space. We think that there's more value will be created in Web 3 than Web 1 plus Web 2 combined. So Web 3 will be more valuable than the last, if you think of maybe the internet developing over the last 25, 27 years, we think the next 10 years will trump the amount of value that's been created in the first 25 years. So yeah, powerful stuff, lots of fun. If any of your listeners want to get a hold of us, our website is globe, the number three, so globe3capital.com. They can find us on LinkedIn. My name is Jeff Embry. We're very active on LinkedIn. And if they want more information, always happy to send it to them. We recommend folks don't go all in on this space. It's incredibly volatile. There's a lot of risk in it if you don't understand it. But once you understand it, you can really eliminate a lot of the risk and bring it down to just above what we think equities provide as a risk element. And it's a great addition to portfolios and the alternative investment space. And we think it should play a piece with everybody's portfolio. In fact, just as a subset, within the last week, I read Fidelity is now recommending Bitcoin or cryptocurrency as an allocation to their investors' portfolios. So that'll come. And as the space matures, you'll see more and more of that kind of research coming out. And we think it makes a lot of sense.
There we go. Well, Jeff, thanks so much for coming on the show. We appreciate it.
Tim, it's always great to be here. Happy to come back. And thanks for the great questions.
Of course. And if you guys are listening to this, Jeff said his website, but that link will also be down in the show notes. Thank you guys so much for watching, and we will see you guys on the next one.